Welcome everyone to our training video. This is Boris Chai, CMT. I'm a charter market technician with Market Technician Association. I'm the founder of 5starchart.com, and today I'm going to teach you about how to define an uptrend. First of all, this video is for educational purpose. It doesn't offer any buy or sell recommendation. Please note if you have any investment questions, please refer to your investment advisor. First, when a stock is in a long-term uptrend, you want to find out if the trend is reliable and you want to invest in a long-term uptrend. You want to see if the trend is keep going higher and higher. The basic way to define an uptrend is to look at is your stocks is making higher high and higher lows. A higher high and higher lows is a clear definition of an uptrend. So this is Coca-Cola, and I always use monthly chart to look at long-term uptrend. You can see in the last 10 years, Coca-Cola is making higher high and higher lows. So this is basically a very defined uptrend. In opposite, a downtrend is exactly the opposite. That means a stock is making lower low and lower high and lower low. In an uptrend, most of the time you will see technicians use moving average as a tool to define an uptrend. So when a short-term moving average cross over to a long-term moving averages, so we see the trend is changing from down to up. As you could see in 2009, after a major bear market, Coca-Cola moving average and the price start to trade above the 200 weeks moving average. Also, there's a crossover, the 50-week moving average cross above both the 200-week moving average. So the trend has changed from down to up. As you could see, price move most of the time above the 50-week moving averages. When there's a correction, price may retrace back to the 200 weeks moving average and resume the uptrend. So in the uptrend, you could see the moving average helps you to define an uptrend. And institution advisor, they'll always use the 50 days or the 50-week moving average as a key factor to determine an uptrend. At 5-star chart, we want to teach you something more complex than just simple moving averages. We could also use a multiple short-term moving average and multiple long-term moving average to filter the noise in the uptrend. So as you could see here is a multiple moving averages, both in the short term and the long term moving average of Coca-Cola. You could see most of the time the price is trade at the short term multiple moving averages. And if there's a correction, it touch the long-term moving averages, but it never violate the long-term moving averages. So as you could see, when it violate, it means it went to the Coca-Cola became a bear market stock. This is what happened in 2008 and 2009. Well, you may question, is it too late to spot this downtrend because this is a monthly chart? Well, you can always use weekly or daily to create multiple moving averages to spot the long-term trend or if there is a change of trend happen for a stock. Japanese use Ichimoku to define trend. It's a very useful way and easily for visualization. As you could see, The green cloud represent an uptrend. If the price move inside uptrend, means that the trend is a little bit weak, but it doesn't mean there's a change of the trend. Sometimes price could drop below the cloud, but it doesn't mean the trend change. Because it gives the investor a buying opportunity. When you move back up to above the cloud, means the uptrend has reconfirmed. So the western side, they use channel to represent a uptrend. As you could see, this blue channel define the uptrend for Coca-Cola. Both they are very useful to draw a long-term uptrend for a stock. Now I want to show you how to use indicator to study the trend. Because when an uptrend happens, you want to involve with a stock when the trend is picking up stream. That means you want to buy stocks that is in a very strong uptrend. You don't want to buy a stock that is just get stuck in a price range it never really move above. Because when you trade, you want your money to be active and it's not a dead money investment. So I use ADX, this indicator, as a tool to study the strength of a trend. As you could see, Coca-Cola during this major uptrend has two very strong uptrend. From this level to this level, also from this level to this level. How can I spot these two strong uptrend? Well, if we use ADX, ADX could help to define when the trend will start to pick up stream. So when we see the black line represent the ADX, means the strength of an uptrend. As you could see, there is a horizontal blue line here. It is at 20 level. When an uptrend start to pick up stream or a downtrend start to pick up stream, the ADX will trade above the 20 level. So as you could see, ADX start to break above 20 level and the DI line, which is the green line, also start to move above 25 level. You could see Coca-Cola stock start to go up very strongly in this range. As the uptrend start to get in an extreme level, you could see on the monthly chart the ADX will hit about 40 or above. Once we see ADX hit about 40 level, means the end of this uptrend is coming to an end. So the trend is close to exhaustion. That's why you see this give you a warning signal that this uptrend is about to change. So as you could see, when you come down, you move a lower high, you create a ADX divergence. Although price have moved to a new high, but the ADX give you a negative divergence, which represent the top of this uptrend. You always want to get out when there's a negative divergence of the ADX. So that's why you saw after this divergence, we saw price plummet and Coca-Cola drop back from $45 to $39, has a major corrections. And the second time we see the ADX also start to pick up after the 20, you see the uptrend also resume again. A new uptrend has started. So this is how you use ADX to define the strength of a trend or the weakness of a trend. When ADX is below 20, you don't want to trade a stock because it could be in a sideways movement for a long time. Until ADX has traded about 20, also the DI line has go about 25, then you see the uptrend has picking up steam. Another way to spot an uptrend is use Bollinger Band. This is Coca-Cola in a monthly chart. I put the monthly Bollinger Band on the chart. As you could see, Bollinger Band is a very useful tool to help you to understand price trade within a band. 95% of the chance price will trade within the Bollinger Band. That means you have less chance to trade outside the Bollinger Band. For price to trade above the Bollinger Band, you will see the market will reverse right away the next month. So it keeps you understand that this trend is within a well-defined deviation area. What Bollinger Band is could help you is they give you 2 times standard deviations of the price movement. As you could see, when the band start to narrow or widen, that means how the trends pick up steam or trends start to consolidate. As you could see, during those periods, the band start to narrow somewhat. That means the price action is only a sideways action. But when you see the Bollinger Band start to widen, that means this trend start to pick up. And the other useful thing about Bollinger Band is when it is in an uptrend, you will trade on the upper level of the Bollinger Band, which is above the medium line of the Bollinger Band. It's a well-defined uptrend. So Bollinger Band could help you to keep you understand what type of market you are in. When you trade below the Bollinger Band or below the medium line of the Bollinger Band, as long as you stay inside the Bollinger Band, it will only give you a buying opportunity on a long-term uptrend. Technical analysts use RSI as a tool to spot the strength of the trend as well. You will find RSI is very useful to define an uptrend. One of the very famous technicians, Connie Brown, wrote a book and talked about how to use RSI to define an uptrend. RSI has a bull market character and a bear market character. In a bull market, like Coca-Cola, the RSI will trade always between the 40 to the 90 level. This green zone represents a bullish RSI, which means the stock has been trading inside a well-defined RSI level, which is a bullish zone of a bull market, which means when RSI comes back to the 40 level, it only gives you a buying opportunity. In opposite, when the stock is in a downtrend like Avon products, the RSI will give you a reading that is way below the 30 level. The bear market character of the RSI will trade between 10 to 70 level. You can see RSI never will get overbought again. When I say RSI get overbought means it will trade above 70. So as you could see, Avon has a major rally, but this rally never get above 70 on the RSI. That means this is only a bear market bounce. So after this bounce, Avon product resumed the downtrend. So in a downtrend, you want to short a stock, you always look for RSI went back about 70 level, gives you a signal to short. Well, thank you everyone to attend today's training video. Hope you understand what is an uptrend and what is a downtrend and how to use technical indicator to spot an uptrend and a downtrend. It will always keep you at the right side of the market. Hope you enjoy the video. Bye.